Can you see it?
Yep.
Okay, go.
Go. You're live.
And welcome out to our halftime report, although this is actually more like overtime, Matt, since the markets are closed here today. We've got limited market participation. Futures markets, always a Globex futures market open 24 hours a day. Forex markets are open, but the U.S. equity market and options market are closed.
Futures market's closed too.
Yeah, how you doing, brother?
Doing good. Futures are closed. Going to open after the market today.
Did they close the CME and the CBO?
They closed them all, honoring President 41, George Herbert Walker Bush, lying in state today and overnight last night. And you know, when a president lies in state, the United States shuts down a little bit and honors that president. And President Herbert Walker Bush certainly deserves that designation.
Yeah,
great American patriot.
I mean, obviously, whenever you're at this kind of point, you're going to remember somebody's life, their legacy, all that kind of thing. Obviously, somebody who committed his life to public service, one of the youngest people to ever become a fighter pilot, for our military, U.S. Marines, I believe. Is that right? USMSO.
Mm-hmm.
Yeah.
He was a pilot for the Navy.
Is that right? Yeah. I saw some Semper Fi stuff coming through. I'd have to look up. I don't even know exactly what branch he served in, but maybe he was actually just because he was the vice president.
I do know he was shot down in World War II and was rescued by a submarine. I saw a picture the other day of his service dog sitting by his casket, and it brought little tears to my eyes. I'll always remember George H.W. Bush fondly. I still remember the 1988 presidential election, even though I was a really, really young kid. I still remember, the Dukakis, those debates in the presidential debate. I mean, you and I, we were political people growing up. We were political, right? Mm-hmm. Watching debates and talking with our father. And, from a very, very young age, our father would talk to us about history and politics on the construction side. And it was just, I remember the first election I voted in was 1996. And from then on out, I voted in every election and whatnot. But I'll always remember watching that 1992 presidential election year. And, I was 15 at the time. Our father was a county commissioner at the time when we were growing up. And he was a Republican. We were born and raised conservative and Republican, but our father taught us to be critical thinkers and open-minded, and to question certain things as society and humanity evolves and technology evolves. And I still remember those debates about Ross Perot and the impact Ross Perot had on that election. And over time, I've come to believe that Ross Perot didn't have much to do with that election. That it was more economic driven, and you had a young up and comer in Bill Clinton who took advantage of that. But Bill Clinton, I believe, won that election with like 38% of the popular vote. And George Bush, obviously had a horrible approval rating during that election season. But if you'll remember, during the very successful first Gulf War, his approval rating was in the 70%. And that's something President Trump, President Obama, and his son, President Bush, never even sniffed into what his approval ratings were for HW. And then, after he got out in the service that he provided to society, he's a man. You can disagree with his politics, Tim, but you can honor the man.
For sure.
A man who served his entire life, dedicating his life to the service and prosperity of the United States and the security of the United States. He's a great American patriot. And, one of the things that brought tears to my eyes was I was reading a story about President Bush's last communication with his son, President George W. Bush. And he said he denied going to the doctor. He was going to go to the doctor. They wanted him to go to the doctor. And he said he's ready to be with his daughter, who died, I believe, of an illness at a young age.
Like a young kid, like 2 or 3 years old. Right?
Very, very young age. And he said, after 95 years, he said, I'm ready to be with my daughter and my wife. And I just brought tears to my eyes. Again, in the American political situation and environment that we're currently in, everybody has to have a hot take. Everybody has to be, get their, 280 characters heard, right? And they want to have divisive opinions, and they want to have these quick take opinions, and they disagree with absolutely everything anybody ever says that they don't have a fundamental understanding of. And the simple reality is George Bush didn't represent that. He represented somebody who could bring people together. He was a leader of men. He was a leader of people. And you can respect that. And like I said originally, you can disagree with the man's politics, and you can disagree with that, but you have to honor the man because of his public service. And that's where I'm at today. I admire the president, and I think we should honor and respect that. And I've seen some nasty things on Twitter over the course of the last couple of days from some people who disagreed with his conservative politics, and that is just absolutely so wrong. It is so wrong, and those people should be shunned from society, because honor the man and his legacy and the life that he lived, even if you disagreed with some of the things he did along the way. Tim, you and I have been best friends, brothers, our entire lives, business partners, and you and I disagree, but at the end of the day, we serve a certain purpose, and we both have that mentality. So we can put those differences aside and go to the common good and the greater good, and that's what somebody like a George H.W. Bush lived his life around. And I loved it. I love this lying in state. I love the memories coming in, and I love the honoring of a man. It's a sad day for America, but it's also a happy day to celebrate the life of a great patriot.
I agree. Very well said, brother. I know just a man who's committed his life to public service. You don't see that very often, and I think he did it with good intent. Obviously, leaves an amazing legacy. 94 years old. He was the oldest president, ex-president to ever to live to that age, I believe, from what I was reading. What a deal, and Barbara just passed last year, I believe.
Last year.
Yeah. So,
Year.
You see that with couples sometimes, especially when they live a life together for 70 years, and one will go and then the other one will go pretty quickly.
It's actually quite an amazing story.
It's right? A love story. Yeah.
It really is. And find somebody who would say anything negative about Barbara Bush.
I mean, it's last year. That was April of this year.
Yeah.
April this year.
Yeah, it feels so long ago, but it was 6 months ago.
It was just like 6 months ago. And I also liked it that the Bushes invited President Trump and his family to the proceedings and the funeral and whatnot. I know when McCain died earlier this year that Trump wasn't invited, and that kind of was a little bit of a partisan type situation. But I do like it. Maybe in his last movement in that, maybe he slightly brings this country a little bit closer together.
Yeah,
I'm not holding my hope for that one, but maybe.
Well, we're here even though the markets are closed because we have our routine and we believe in routine. And, I appreciate the tribute there to President Bush. I'm sure you and I will be talking about him and some of the things we were talking about him yesterday at the gym, just his legacy and his impact. Definitely a great American. Let's break down the markets real quick, Matt. Rapid fire through all the charts. Just kind of give a quick update from when we ended the halftime report yesterday to where the market ended up closing. There was some volatility. Markets kept selling. S&P, what do you see?
Well, it did what we expected. We said when it broke that level, it's going to go to 2,700. It did that. So now 2,700 is in play. You got to focus on that 2,700. And I was in the coaches show last night with Coach Noah, and we were looking at that 2,700 level. And I asked him the question: if 2,700 holds and we see market appreciation back up into the 2,800, you're going to have a different technical read on that than if the market goes all the way back down into support between 2,600 and 2,625. So even though I'm not looking at this as anything that could shape out the market, into some type of bullish or some type of bearish, we're still sitting in neutrality. I do think it's important to keep an eye on that 2,700 level for the next market open. Especially coming into the futures market tonight. Because if 2,700 is broken, Tim, you have clear selling down to support between 2,600 and 2,625, which means a lot of those bearish triggers, a lot of those bearish trades are going to continue to be profitable. 2,700 holds, Yeah, that might give you a little bit of bullish mentality, but let's keep an eye on 2,700.
Very good. Move on to the Dow real quick. Obviously, these patterns are going to be very similar, large cap S&P and the Dow. But this one's sitting on the 200-day moving average. Does that 200 mean anything to you at this point? Yep.
No, it's a similar pattern to the S&P. I give the exact same credence to 25,000 in the Dow as I do to 2,700 in the S&P. It has absolutely nothing to do with that 200-day moving average. And I don't know if it was or Coach Frank yesterday, but you called it, it's a moving average soup. And basically you have all these moving average converging together, and they're not playing a role in the analysis right now. Now, it is moving averages playing a role in bullish uptrends, bearish downtrends? Yeah, go look at EA, go look at the the Australian dollar today, right? So yeah, it's still playing a role in trending conditions, but like we've talked about in recent history, when you go into neutrality in a volatile condition, moving averages don't mean very much. And so I'm not looking at crosses here. I'm not looking at moving averages acting as support and resistance. I'm looking at your historical pivots, because that's what's been proven to be support and resistance. 25,000 to me is very, very important in the same capacity that 2,700 is for the S&P. You break 25,000, you break 2,700, you're going to get the same type of technical movement most likely, which would be priced to go back down into the lows. If 25,000 holds in the Dow and 2,700 holds in the S&P, you're most likely going to see price appreciation coming back into the highs. So keep an eye on those levels, because I do think they're important for the short term for day trading and swing trading. But overall, there's nothing really that is happening right now. We need to let it shake out. We need to see 26,000 broken on the Dow. We need to see 2820 broken on the S&P for this to get more bullish. For us to get more bearish than we are right now, we need to see the lows broke. We need to see 26,000. Not 26,000. We need to see 2,600 in the S&P broken. So until those ultimate levels of support and resistance are broken and a trend does in fact develop, we're just kind of in a wait and see mode.
One thing that I looked up this morning, because markets are closed, I started looking at bigger picture data. The best performing stock on the Dow year to date. You want to take a guess?
Best performing stock?
All year long, year to date. Merck, MRK, 38% still, Matt. Here we are. We're talking about a bear market and all the volatility. I think context does have to come back here at some point. Microsoft is still up 26% year to date. United Health up 26%, Pfizer 24%. Now, do you know who the biggest loser on the Dow is year to date?
Who's the biggest loser?
Goldman Sachs. Thought that would make you happy. Down 27% year to date.
It does make me happy.
They've had a rough go this year.
Couldn't have happened to a better company.
Yeah, just been a poor performer. You look at that volatility and downward movement, it's just getting worse and worse and worse. Financials have been
down year today.
27%.
But off the highs, about 30%.
Yeah.
Yeah.
IBM down 20%. Interesting action. Let's move on from the S&P, the Dow. Let's go on to the NASDAQ. Let's talk about NASDAQ.
Same thing. Don't have any further analysis.
Kind of the same deal, right? I mean, obviously, I've been more bearish on the NASDAQ. You've been more bearish on the NASDAQ than the other indexes, and that's just because of the relationships of the pivots. Same type of analysis we're going to be looking for coming into the next day.
Well, it also just means that if we're looking for shorting opportunities, we're more likely to look at NASDAQ and Russell 2000 companies right now than your blue chip companies, right? But from an analysis perspective, if 2,700 in the S&P is broken, 25,000 in the Dow, 6,800 is going to be broken in the NASDAQ. So there's really no more analysis there. It's just a matter of if it stalls down at support versus setting a lower low.
I agree. RTY, if you would, look at small caps. They got just hammered yesterday, Matt. The RTY just was dropping and dropping and dropping and dropping. I saw that index just selling precipitously. I think we closed near 4% down. And it's interesting when you think about just the relative weakness on those small caps. When they had been a little bit more neutral, they ended up with a little bit better performance, over the course of some time, but not yesterday. It was very, very weak. Do you think that this one's the first one to go if we are moving more bearish?
Yeah, this and the NASDAQ.
Yeah. Yeah, I would agree with that. Stocks are down, stocks are closed, and there's not a lot going on in stock market day, but there is action in the Forex market. The one thing that the US can't control, even if we do honor one of our presidents who've fallen, is the international currency market. And we're not going to be able to close down something that is 24 hours a day all around the globe. The dollar in this little high compression pattern, Matt, kind of an ascending triangle pattern developing here. What are you seeing in Forex right now, if anything?
Not a lot of movement specifically on the dollar index, Tim. And there's a reason for that. And a little bit of the reason is how the individual currencies are performing in the currency market this week. A couple major central bank announcements have happened this week. First of all, the Australian dollar announced monetary policy on Monday, and you're seeing this start to form a little bit of bullish retracement. Keep an eye on the Australian dollar, how it performs around this 20-day moving average. If we're going to see something happen on the Australian dollar like we did on the New Zealand dollar, watch this form support somewhere around that 72.50 range, 72.60, 72.70, somewhere in that range, right where that 20-day moving average. That could be a trade coming into the Forex market over the next few days. So keep an eye on that Australian dollar. And like I said, even if you don't trade Forex, there are ETFs that you can trade, such as FXA. So if you look at FXA here, for the Australian dollar, and you're and you're not seeing the price movement today, Tim, because the stock market is not opened up, right? So this will happen tomorrow, and no, you can't take advantage of it because it's just going to gap wherever it closes today. So keep an eye on that. And as you can see, that now you're seeing today's price action because we're actually looking at the currency. But keep an eye on this to slow down and perhaps pivot. I am on the Forex report, and so this could be a potential trade coming into the Forex report later on this week as well. Another currency that I have been just patiently waiting for is a break of the 127 level on the British pound. And it's not the test. I need to see that candle close underneath that level. That has been a significant level of support for a very long time on the on the British pound. You see that on the weekly candlesticks here, Tim. Major support here at 127. This is right where that old resistance was over here, T. It's right where that hello goodbye type situation was right here, where you broke out of the W formation, set your first higher pivot. So you're seeing that major level of support. If you break 127 on that weekly chart, Tim, I mean, yeah, 125 will play a role, but there's no real major support until you get down to 120, and that's 700 pips away, which is a major movement in the currency market. So keep an eye on the pound and how it behaves at 1.27. And then the last one happened here today, Tim, and that was on the Canadian dollar, and the Bank of Canada announced monetary policy today. And Canada has a 1.75 interest rate. They're one of the higher interest rates of the major currencies right now. Dollar number one, and then you got the CAD and Aussie and New Zealand dollar right into that range. And then you have some negative interest rates in the Japanese, as well as the Europeans, and what's the last one? The Swiss franc. So you do have, so basically what happened today, and one of the reasons why the dollar is appreciating so well against the CAD today, is because even though the CAD didn't raise interest rates, they didn't lower interest rates, they indicated I want to say, a fairly dovish stance on interest rate policy. They both, the Bank of Canada warned of slowing growth in the world. They warned of, they basically just said, you saw in the G20 the volatility of these trade deals, what's happening in the stock market. So they warned of the volatility of the trade deals. They warned of slowing growth. And they also warned of oil and the crisis that is happening in oil over the course of the last couple of months. In Canada, an oil exporting country, oil very big to their economy, as well as precious metals are as well. And so that indication, led to a little bit of dovish behavior, and that dovish behavior saw price appreciation come against the dollar. And the significance of this, Tim, is you're breaking out of this level here. I don't want to call it a breakout until you get above 134, but you're coming into that range right around 134. That's a potential trade to the upside as well. You look at that on a weekly chart, you're seeing real good price appreciation, potential breakout candidates. I would say your first target on a breakout of 134 is 135, followed by about 1.375. So you got some trades setting up in the currency market that could be triggering. And the number one currency that I've been touting over the course of the last month and a half is the New Zealand dollar here. I've really liked the reversal pattern, like the price appreciation, like the break coming back out of this. Now you're seeing a little bit of retracement. Now, I didn't catch this because it gapped over where I was trying to get into it at T, but I'm watching this. You got a little evening star inverted hammer candle right here, downward movement in price. Watch the New Zealand dollar come down into that breakout channel, somewhere around 0.6860 to somewhere around 0.6890. Watch that come down into that level. Watch that 20-day moving average catch up to it, and let's see how that performs off that. But I'm looking at perhaps the New Zealand dollar trade coming into the very near future as well.
You know, out of all of them, the one that kind of grabbed my attention the most as you were, breaking them down, and even when I was looking at the futures, is the Canadian dollar one. It makes me wonder, how will oil volatility affect the dollar CAD pair? Obviously, there's a lot more to it than just oil, but
let's update the dedicated halftime crew who shows up here on a day when the market's not even open. So thanks, halftime crew. We love you guys. But day one of OPEC's kind of happening, starting to happen right now. And the news is kind of like the same news that we got out of the Trump President Xi communication that came out of last Saturday. It's very similar to the communication we got out of the G20 with Russia and Saudi Arabia. We have a deal, we have an agreement, but we don't have parameters, right? Mm-hmm. And so it seems like there is a consensus for the oil producing exporting countries, otherwise known as OPEC, to cut oil across the board. There seems to be a consensus. What there is not at this point, though, is a consensus on how deep those cuts should go. And Cody asked me a question. He said, Matt, can cuts stop the blood of oil over the last couple months? And I said, yes, they can. Cuts can stop the bloodbath that's been happening in oil from OPEC. However, we cannot make that determination until we see how much cuts is going to happen, because we know the dearth of supply, right? We know the dearth of supply we've had over the course of the last 2 months coming into the market, and quite frankly, we've seen that dearth of supply happening for the previous year, but it's really kind of escalated in the last couple of months as global demand has certainly slowed for oil. But so we can't say yet if cuts alone will save oil. We have to see the number of how much they're willing to cut to see if that can save oil. Obviously, the market has been responding bullish to it over the last couple of days, especially coming out of the Saturday Russian and Saudi Arabian agreement to extend their renew their cuts. Again, we're light on substance. It's the same thing, Tim. And I said this in the pre-production show. I'm getting fairly frustrated with all of this. I'm hearing, trade agreements going to be amazing, best trade deal of all time, but we have zero parameters, zero type of numbers to it. We're still negotiating. Fine. Okay. Wake me when you actually have a deal. Russia and Saudi Arabia, hey, we're going to renew our agreement, but we don't know exactly what we're going to renew. All right, fine, thanks. Thanks for helping. OPEC, hey, we have a consensus on cuts, but we don't know the cuts yet. Okay, fine. Give me some finality with some numbers here, and not just random whatever some person thinks is going to happen. So we're very light on substance here, and we should approach this with caution until we have some degree of numbers and substance to those negotiations.
They hold those OPEC meetings twice a year, generally in Vienna. I'm looking up some information on it right now. There's about 24 countries being represented, even though there's only 13 OPEC nations. They also invited the Joint Ministerial Monitoring Committee from those other 11 countries. I'm sure, Matt, there's a lot of posturing. They're going to have an official statement. Do we even really know? I mean, this is one of those by the expectation kind of things, like the G20 last weekend. What could they even come out and say that would actually prove it to the market that they can reduce supply? We've seen supply builds for 12 weeks in a row. Now, I'm sure OPEC can come out and pound their chest and whatnot, but that might create short-term volatility in the market. It doesn't change the fundamentals of supply going up for the better part of 2.5 months. And if we are going into a global bear market, Matt, there's way more downside in oil. I'm not saying it can't recover, but we have to see the risk in this chart, right?
No, of course there's risk in this chart. And cuts alone, if they do a simple cut, that's not going to stop the supply problem. And if we go into a global recession, them cutting's not going to stop the supply problem. Okay. So cutting alone is not going to get the job done. But if you cut enough to the point where you can have short-term bounce, you might see some degree of neutrality come in. I don't think you can touch oil until we get some substance to what is happening here. And until that moment, oil's still bearish.
Yeah, definitely. I still got a bear, kind of mindset towards it as well, and a posture towards most of the commodities, not necessarily natural gas. We'll go to in just a minute. We do get oil inventories tomorrow. Here's the forecast, Matt, that we're going to have a draw of 2 million barrels. Do you believe it?
No. Let's see how accurate I'm going to be. Okay, so they've been off by about 3.5 million barrels. And so I'm just going to say you said 2 million barrels? Did you say 2 million is the expectation?
They're supposed to draw 2 million barrels, yeah.
I'm going to say they're off by 3.5 million barrels tomorrow.
So I've got a random number generator between 1 and 10 million. I'm going to put 10 million,
and that's
going to be just as accurate. They're going to build 7 million barrels. That's what my random number.
Random number generator. Okay, so Tim says they're going to build 7 million barrels tomorrow. I say they're going to be off by 3.5 million. We'll see who's more accurate. Watch tomorrow. This be the first time that they're in line with their projections.
If they build 7 million barrels, oil's taking it on the chin. I'll tell you that. So
yes, they build 7 million barrels. Oil's going down. There's no doubt.
Got a new member of the halftime crew here in Austin, Matar. Welcome, and he wants some analysis on NG. We're going there next anyway, Matt. Is it cold outside today? It felt cold outside.
You know what? It's a little overcast. Today. It is a little chilly. I took my daughter to school today, and the air was crisp, but it wasn't a biting cold though, Tim. And so I think because of the weather and how the weather was just kind of like a little bit cold, not really that cold. Natural gas is going to be neutral.
Yeah, it's got to break, before you can.
We're kidding on that one for Anas. You're getting to know us. We're kidding on that one. For me, you can't touch natural gas right now.
Can't touch it till it breaks out. If it broke out, though, there is a swing trade right there.
Oh, of course.
There is. You've got resistance developing up here.
You have an ascending triangle.
You
do have an ascending triangle here. And so if you look at natural gas, and I'll just get some drawing tools. I got to learn how to draw like Noah. He got this drawing tool, but it drives me nuts because it takes up some of the area on the screen over here. But it's got some really good drawing tools. But here's my drawing tools. Boom.
I have his number. You can probably call him. Noah will help you.
I think I have Noah Davidson's number as well. I think I talk to him every day, just like you.
Yeah.
Okay, but no, you do have this ascending flag type pattern here, where you break 475 and you close above 475. Obviously, the futures market not open up right now, but yeah, it's you could trade that above those levels. Now, if you're looking at position trading, I think a close above 5 would be more important in that. But if you're looking at swing trading, something above 475, yeah. Personally, I wouldn't touch it. But the halftime crew knows me very well. And I don't love trading in ridiculous volatile conditions that go against the historical norms, right? And so for me, and I've said this for a few weeks now, let natural gas subside. There's going to be wonderful cash flow opportunities on natural gas for a very long time. Wait for the volatility to subside a little bit. It will, okay? But that's my take on it. I just don't like trading in conditions that historically are not justified. Look what natural gas usually does. This is natural gas usually. This is natural gas when they blow up hedge funds. Let the volatility subside.
Well, and historically, if you look at like a 20-year chart, it does have periods where it has that random volatility. It's almost like the VIX a little bit, where it just kind of explodes and then comes back and settles in.
Yeah, it's almost like it's every winter month, and sometimes it goes up coming into it, sometimes it goes down. But even at this, Tim, look at the winter month coming into 16, 17. You do have some pretty aggressive price movements both up and down here. Look at this though. That's not normal.
Yeah.
Right. That was weather related coupled with forest fires.
Yeah, definitely volatility in natural gas. Those couple of weeks where it was going 10, 12% a day up and down was just absolutely wild.
Well, and if you'll remember back in 18 when it did this, when it went from 2.6 to 3.5, it came right back down coming into the year. There is some substantial seasonality here. Goes up coming into the year, goes out coming out of the year.
Let's move on to gold and silver, talk metals markets here for just a minute. And I like to break out whether it can sustain this in a straight run or not. I don't know. You know, you did have to run about 3 or 4 candles. It had a little pause in there, like you'd pointed out yesterday. Nice breakout on a 2-candle breakout, Matt. If the dollar rallies, though, will gold pull back into the range? What do you think on metals here?
Yeah, if the dollar rallies, the gold will pull back into the range, and it'll set up for another trade. I love the breakout of 1240 though.
Yeah, definitely looking good. Better than silver. Silver's more stuck in the middle. I did see a note in our clubhouse that I thought was really cool. Cynthia, who's one of our longtime halftime crew and one of our, best members of our community and team, she said she bought her first metal coins with the help of our partner over there at Zaner. And I thought that was just warmed my heart, seeing that and thinking,
I like that too. I like that too.
Taking steps towards metal ownership is always a good thing, in my opinion, especially about this time of year. You can
if the all everything debt bubble explodes, Tim, people who invest in precious metals, not gold in the paper asset market, but precious metals, will be very happy with that.
One thing that I did want to talk about tonight, we have a mastermind group, Matt, that we do once every month. One of the most important things, and I put a question up in our clubhouse, a poll question: do you trade covered calls? And I had about 5 different answers, and I thought that was, something I wanted to hear from our community about. Our Tackle 25 is a very important part of what we believe traders should learn. And that's cash flow, that's asset accumulation, that's conservative cash flow, not trying to make too much return, which can always bring in more risk. Talk a little bit about the Tackle 25.
Tackle 25 is our list we put out every single year of, it's a cash flow list is what it is, but we do take into account some growth in it, but it predominantly is a cash flow list. Most people use it for covered calls. Some people use it for naked puts to enter into covered calls. Other people use it for bear calls, bull puts, but for the most part, it's a cash flow list. We put together this list every single year. We release the latest list the first trading day of the year, which will be January 2nd of 2019. You and I will be putting together this list over the next month. And the one thing I'd like to know from our pro members over there, Tackle Trading and tonight's cash flow in tonight's mastermind group, Tim, is what do you want to see out of the Tackle 25 next year, right? What type of support do you need to have outside of the videos and the community and us, having the mastermind group? What else do you need from us to help you apply covered calls? Because covered calls is a core strategy for me, and I think it should be a core strategy for almost every trader and investor out there. It's a wonderful way to cash flow on long-term holdings. It's a wonderful way to cash flow in IRAs, retirement accounts. It's a wonderful way to create long-term wealth through compounding gains. It's a wonderful way to hedge downside risk as well in the market. So, covered calls should be a mainstay for everybody in their accounts. And I don't care if you only have, $3,000, $4,000, $5,000 to your name, and you're like, well, man, I can't afford stock, and I would rather just go do some swing trading and pop some home runs and all that. No, you take a portion, you go invest in something very cheap. You buy 100 shares, you rent it out, and you start compounding, because a little bit of money can grow into a lot of money over the course of a 10-year time frame.
Yeah, for sure. I mean, you and I have said that before on our podcast. In fact, I've made this statement and you've generally agreed with it. I think we talk more about covered calls than anything else at Tackle Trading. I mean, we cover everything. We cover all the markets, all the products, all the different strategies, systems, ideas, but it tends to be a pretty common theme, Matt.
Well, the way I look at it is like, okay, so you got the Traders Lounge, right? And the Traders Lounge allows people to log in, get help, answer questions, get advice, all of that assistance every single day. You have the halftime report you and I do every day, where, we're doing our daily routine. We're helping our community do their daily routine in our report every single day. You have the coaches shows, where we do deep dives into systems and trading, swing trading, whatever it is. Like, for example, we did a deep dive, Noah and myself, in the coaches show last night on updating triggers from the scouting reports. Mm-hmm. You have the Cash Flow Club to help you with cash flow systems on every Thursday. You have the Tackle 25, which will help you get up and running with covered calls on a monthly basis. You have Bear Market Survival Guide to help you understand how to trade and handle bearish conditions. And you have Cash Flow Condors, which is an excellent cash flow system. it's a one-stop shop, right? It's a one-stop shop. So, it's just a matter of getting everybody involved in that. But in my estimation, with all of that, the number one thing that people should focus on initially is getting their retirement accounts established and getting cash flow coming in and starting to compound gains. Once you start doing that, then you start to take a deep dive into the swing trading and the day trading and the cash flow systems and everything else out there. Because the covered call, it's not, everything is advanced for somebody who doesn't know. Would you agree with that?
Yeah.
Everything seems hard, right? But when it comes to actual trading, the covered call system can be one of the more simple systems to really kind of perfect. Okay.
Well, and I got to comment on that for a minute, because I was talking to a student just this morning, and he was having some challenges. I'll just say that. Challenges with the software, didn't really know how to build a trade in Thinkorswim. He was a Thinkorswim user. Challenges with the language. He's from Singapore, and he reached out to me for some help. And he's, Chinese, descent and whatnot. And so English is his second language. Challenges. And the advice I gave him, I said, listen, until you master one thing, don't try to do more than that. Yeah. And I pointed him towards the cover call, and I said, go back and review all these rules, learn how to do this one thing. Now, it could be a different thing, by the way. It could be Forex or swing trading.
It could be, but I disagree with that. Yeah. I think mastering the cover call is much, much better than going out and trying to mastering, trading in the currency market initially. Mm-hmm. If you can get the cover call mastered and you can get cash flow coming into you and you're compounding gains, you're learning so much about the market just in that one system. Sure. Right? You're learning so much about different cash flow systems just in that one system. You're learning about different market dynamics. And here's what also I know. You're not going to blow up an account doing covered calls. Mm-hmm. But a new student who tries to go pop some home runs in the options market or thinks they can go trade the leverage of the currency market to get a head start, what you're going to do is you're going to blow up your account first. You're going to get frustrated, and then you're going to come back to us 5 years from now, and you're going to be like, well, I should have listened to you, right? No, start this conservative. You don't need to get rich in your first month as a trader. You don't need to get rich in your first year as a trader. You need to understand the market dynamics. You need to start getting cash flow coming into your account. You need to start compounding gains. You need to get control of your retirement account. You need to start the educational process in that. Your first year is not about mastering something. It's the gun going off in a marathon, Tim. I didn't start trading currency till 5 years into my career. I didn't start trading futures till 10 years into my career. Mm-hmm. People try to take too much on initially. Think long term, because I promise you it's going to come whether you think so or not.
A couple of thoughts here. Number one, love the conversation here in the chat. Didn't want to miss one of our best, most loyal halftime crew members question. And Blake asked, how did the California fires affect NG? Just the volatility in those markets. Obviously, when you're dealing with utilities and implication, it was just creating a lot of volatility in commodities.
Look what happened to PCG in that environment, right? PCG, and we'll go back to the chart here. But when you look at PCG in that environment, it's going to impact their net revenues. Whether they're liable or not, that's going to impact their net revenues. And so it's going to drive it down to the downside. On the same side, it might increase the cost of utilities for a lot of people. So that would increase revenues for natural gas. So the cost is going to increase for natural gas in that capacity. So it's not a one-to-one correlation. And sometimes you'll hear us make comments like that as, we're just making fun of other pundits who we consider lazy. Right.
Sure.
No, it's not a one-to-one correlation, Blake, but it does have a psychological impact because costs might increase.
Well, the other thing I'll say is who knows what actually affected all of the natural gas movement. I'm sure there was news, there was fundamentals, there's all that. But if you
have seasonality there too, though.
Well, but
it does have seasonality in November and December.
I'm going to remind you of two moves. Okay, that at the time, every headline and all the news agencies tried to explain them away. But now that we have context and history, we know what actually happened. Silver, when it went to 50 an ounce, was being manipulated. Yeah. Sometimes institutions on the back end are doing things that we don't see at the time. We don't know. And then oil, when it went to 100 whatever.
To be fair, we did know exactly what they were doing with silver and gold and copper, and we saw Jamie. We know what Jamie did.
Yeah,
we know Jamie walked over like a little like he's that creepy guy. He's walking over doing some creepy deal. We know he walked over from his New York City office to the Chicago Mercantile Exchange floor. We know that. He got on his little tube and he just walked over and he said, "Hey, listen, We need to kick out all the speculators. We need to kick out the people like Matt Justice. We need to kick out all those speculators, right? That don't have large accounts like Jamie Dimon does. I don't have billions of dollars like Jamie Dimon does. And we need to kick out all those speculators and how we're going to kick out all those speculators to make sure that they liquidate their position and drive gold, silver, copper, everything, food, everything down, is we're going to increase your margin requirement. Now, we're going to justify that by saying that it's due to volatility. Okay, it's due to volatility, and we need increased margin due to volatility. And it's like, but it's doing nothing but going up. Margins should be going down as things are going up. But no, we're going to make sure that you increase from a $5,000 position size now to a $50,000 position size. And since you can't do that, you know what we know you're going to do? You're going to capitulate. You're going to close your position, liquidate your position. That's going to force all the speculators out of the market. And then as gold plummets, as silver plummets, here comes Jamie now on his stallion, his black stallion horse. Save the day. Let me buy up all gold and silver contracts, and I'm going to own all gold and silver. You son of a gun.
For those of you who don't know my brother, he's a big fan of Jamie Dimon. Jamie Dimon, the Brad Pitt of Wall Street power brokers. There's no doubt about it. A few years ago, new to the market.
How Too Big to Fail portrayed him as. They might as well have Brad Pitt play him. They got to reshoot Too Big to Fail and have Brad Pitt play him. Have George Clooney play. Who's George Clooney going to play in that movie? He'll play Ben Bernanke. We'll have George Clooney. Yeah,
Clooney could be Bernanke. Grow the beard. I could see it. Yeah.
Okay. We need a Paulson. Who's going to be a Paulson guy? We need a tall guy. Who's a tall guy?
No.
I'm going to do this. I'm going to recast it. The Rock is playing Paulson. Okay.
No chance. Henry Paulson. I'm trying to think of him. He's that guy who always played. He was. Oh my God.
No, they cast him perfectly in Too Big to Fail. It's that they did, but Brad Pitt's playing Jamie Dimon. Vinny Jones. Oh, John, that's the good one. John, you're bringing his English accent to it. You might bring an axe to the meeting. I like that.
Who's the guy?
Two Guns and Lock and Stock and Barrels, or whatever that movie was called. I can't remember it.
Now I'm going to lose my mind. I'll have to look it up later. I'm thinking about a Wall Street actor who was always cast in like every single movie as the second lead. He was in like all those 80s and yeah. Anyway, we'll come back to it. I can see that. We'll have to cast that movie another time. A couple of different comments coming in about the Tackle 25 and whatnot that I really like. Number one, James in the chat says, good for him reaching out, asking for help, as that is the first step, often my stumbling block. And I think it's a good reminder out there, guys, if you are a part of our community and you need help, there's the clubhouse. You can attend the coaches lounges, the trading lounges, Matt. There's a lot of different ways, but you do have to ask for help. There's no doubt about it. Second thing is in the clubhouse, Matt, I love this comment from Justin. He says, Tim, I honestly didn't like the concept of the covered call when I first learned it, but it and the Poor Boys covered call, who we highlighted last week, has become a favorite of mine over time. I never implemented the strategy, and I kept hearing the coaches say, master the covered call, master the covered call, master the covered call. So I said, screw it, and put one on. After a few months of managing it, I now have multiple covered calls. I think it's pretty cool.
I love it. Tim, market's closed today. I just want to remind people of the Making the Fed movie post I made 3.5 years ago.
Yeah.
Ben Kingsley, and I want to see how accurate I want to get your guys' take on this. Sir Ben Kingsley as Ben Bernanke.
Mm-hmm.
Okay, yes or no? Just give me a yes or no. Ben Kingsley as Ben Bernanke.
Yes.
You can see it. You could see it, right?
I can see it.
Okay.
I can definitely see it.
You could see it. Betty White as Janet Yellen. There's some
Betty White's too nice. No, I know, Betty White's too nice.
I know. A lot of people were like, Matt, you got to find somebody a little more cutthroat. Woody Allen to play Alan Greenspan. Come on. That one is done. You got to lock that one in.
Here's the only problem with that. Alan Greenspan is a cutthroat banker Woody is like the old.
Do we really need to go down Woody Allen's path? Do we really need to talk about his checkered history and
his personality? I'm not sure he could pull it off.
Woody Allen, if he was born in Alan Greenspan's shoes, would have been born into Alan Greenspan. It's a perfect one. I got for Mario Draghi. Okay, I got Daniel Day-Lewis for Mario Draghi. Yes, it's got to be a yes. Come on.
I got no argument against it. Yeah, I got no argument against it.
All right. So Ken Wantabe, I got for Shinzo Abe. I got that one. That one there. I like that one. I love this one. William Dudley. William Dudley from the New York Fed, a guy that I have zero respect for in all capacities. I got Crispin Glover. Come on. Come on. Doesn't get better. Crispin Glover. You gotta love that one. Okay. I had to go Jackie Chan. I had to go Jackie Chan for Chairman for Chairman Corrado. We got Jackie Chan. I love this one though. Richard Dennis. Okay. Or excuse me, Richard Fisher, Dallas Fed president, now retired. We got none other than the former president of the West Wing, Martin Sheen. Okay. James Bullard, the man who's never met an interest rate hike he liked. James Bullard. Okay. He is the Bullard of low interest rates. Let's kill the dollar. Let's do all that jazz. I got liberal left wing, Jim Carrey, to play that one. I like that one. And then I had to get Andrew Suzar in here, who was basically the guy who led the Fed quantitative easing policy from 2010 through 2015. And we got none other. I thought about Kevin Costner, Nicolas Cage, Christopher Walken, Russell Crowe, Liam Neeson. Thought about that, but I just couldn't get past Edward Norton. I just love that. This was the making of the Fed movie, ladies and gentlemen. And for those of you who don't know the story, I literally had this dream where I cast this movie.
Yeah,
making the Fed.
I remember that post. Yeah,
that was something fun, little something light today when the market is obviously down.
I thought about my Henry Paulson call. I think that Gene Hackman would be perfect.
Gene Hackman's retired, bro. He hasn't done a movie for 12 years.
It doesn't matter. He would be perfect. You're acting like we're actually going to get this cast in Greenland. Like, I'm not worried about the logistics of whether or not I can actually get Gene Hackman or not.
I swear to God, the movie I created in my head off this stream was far better than Too Big to Fail. I can promise you that.
Hey, for all you know, we got M. Night Shyamalan on the halftime crew, and he's gonna be like, "Oh, I got this," and he's gonna start just casting away.
All I need is a few more high level Hollywood contacts. That's all I need. I'm searching for it.
Yeah. All right, guys. Here's my challenge for a Wednesday. Markets are closed. Obviously work on your systems, your process, your checklist, but go and work on the cover call today. We've got the mastermind group tonight. Coach Noah will show you how to, assess cover calls. We'll go through the Tackle 25, Matt, that spreadsheet. It's very important that you learn how to build cover calls into that spreadsheet and assess them. But I think one of the most important parts of any trading system is management. And that's where that Tackle 25 post and the video we did. And there's a lot of content over there that can be very, very valuable. If you're a brand new trader, never done it before, go and study up on the covered call for sure.
Yep. Yep. Awesome, guys. We're out today. Thank you so much for joining us, even when the market is closed. That's why I love the Tackle halftime crew. But we'll be back full force with everybody here tomorrow, breaking down the markets, and be here for Theta Thursday. So we'll see you tomorrow, guys. And until then, have an absolutely happy Wednesday. And everybody remember the late great George H.W. Bush. Thanks, guys.
Yep.
We'll see you tomorrow.